just something that pops into my head, and it was there in January of 2020, right after the Secure Act passed. I said, okay, maybe for the first time in a couple of decades, life insurance may be a solution for this wealth transfer. So let me give you a couple of scenarios here. And as a CPA, I want to get your opinion on this. So let's say that I've got a husband and a wife. They've both got $500,000 in their IRAs. And we run the projections of what they want to spend and do all this, and we run up to normal life expectancy. We calculate the required minimum distributions, et cetera. And let's just say that we go to the life expectancy tables and say, man's going to die at 81, woman's going to die at 83. Okay, we can look in there and say, based on historical averages, what do we think those IRAs are going to be worth? And let's just say that they're worth $750,000 a piece at life expectancy. When one or the two, the first one passes away, the surviving spouse can inherit that IRA. So what if we were to go out and say, let's go out and get a life insurance policy on each spouse in an amount that would pay the taxes on that entire IRA when the first spouse passes away, so that they can pay the tax on that and convert it to a Roth IRA immediately. That way you're going to pay a little bit of money to an insurance company over time, and then that insurance company is going to pay the taxes to get the money out of the IRA over into a Roth. Now, we've done a couple of things. We've allowed that surviving spouse to have income coming out of that IRA as they need it, but it's a Roth IRA now, so the income coming out of that is tax-free. That then lowers the tax bracket for the surviving spouse. That also then eliminates this burden of this huge tax liability that could come for the ultimate beneficiaries, which would be the children or the grandchildren. What do you think about that concept?
I think for some people that would make sense, but if we have that situation with the $750,000 IRA that's being converted, we're still going to be paying tax at 37%. So in my mind, if there's a way that we can do some conversions beforehand, we still want to look at when can we pay the least amount of tax, but that's a great way to leverage life insurance to help pay for it, and it does create some flexibility for the surviving spouse. However, if you have a child that inherits it, they can't do a Roth conversion on that amount, but the insurance can be used to pay the tax on that. And so life insurance is definitely much more in play. Unfortunately, the life insurance industry was one of the biggest lobbyers behind
the
Secure Act.
Yeah.
And so they got what they wanted. Insurance is one of those things that's going to help a lot of people. And I think it all comes down to, you have to know your plan. Does it make sense to do the conversion at death? Do you do it during life, or do you do a combination? And everybody's going to be different. That's why it always goes back to my favorite answer. It depends, because it depends on your situation.
Starting your route to retirement.